All right, so I'm just going to finish off this part B. Again, as I kind of rip off sections of this part B and look at them again, I do realize maybe something like I realize again that I've maybe left something off I should have included. So say liquidity here, because there is a problem. Well, even if there wasn't a problem, this is from the point of view of debenture holders. Debenture holders are interested in whether interest gets paid. So if there was no problem with liquidity, I would say it suggests the company will have no issues paying interest. In this case here, because we're having liquidity issues, the company has 0.88 cent of liquid assets to pay each €1 of short-term debts. Make the point, this suggests the company may have problems paying interest on its debentures. So we're the debenture holders, we're interested in that. If the question was from the point of view of shareholders and there's liquidity problems, this suggests the companies may have problem paying its dividends in future, or may have to reduce its dividends in future. So just tailor it slightly depending on whether it's debenture holders or dividends. And yeah, again, if there's liquidity problems, maybe just suggest a way they could improve. One obvious way is to ask your debtors to pay quicker. So to improve liquidity, the company could enforce stricter terms with debtors. Okay, so if debtors are paying us quicker, that will improve our liquidity situation. If we had longer maybe to pay creditors as well, that might improve. There's a kind of handful of ones in the book. I would say that's probably the better one. Maybe postpone paying dividends. That might improve the liquidity a little bit as well. Okay, maybe reduce the level of stock we hold. Yeah, to improve liquidity, the company could enforce stricter terms with debtors, or improve its systems so it can hold less stock. Things like this. All right. So on to the next one. So I had stopped at security last time, so I am just going to go on to dividends and then do share price as well. So dividends is one where it would probably be a bigger and more important section in a shareholder's question, because it's shareholders that you pay dividends to. This question is from the point of view of debenture holders, so we're probably not quite as interested in dividends. I would say the main thing we would be interested in is dividend cover, a little bit in dividend per share as well, just in the level of dividends being paid out. Probably not as interested in dividend yield. Okay. If this was a shareholder's question, I would definitely put in last year and this year's dividend yield, and I would compare it to the same kind of things I compare my return on capital employed to, the risk-free return. So the dividend yield is the percentage return you're getting on the share price. So it's like your percentage return on dividends. So very much of interest to shareholders, and kind of tells you, are they investing their money in the right place? Could they invest it somewhere else? From the point of view of debenture holders, that's less interesting, but I would be interested in my dividend cover, which I had for last year is 1.3 times, and I have calculated this year as being 2.28 times. So that's a positive improvement. So dividend cover has increased 1.3 times to 2.28 times. So if dividends are covered by profits 2.28 times versus 1.3 times, that means they're paying less of their profits out as dividends. Okay, so this means less of the company's profits, less profits are being paid out as dividends. And debenture holders would like to see this trend continue. Okay. So again, like 1.3 to 2.28 is improving. There's no real kind of hard guideline figure here, but I would say both of those are quite. 1.3 certainly is very low. Okay, like one, if it was a dividend cover of 1, that would mean you're paying out all of the available leftover profits as dividends. You're not reinvesting any of them in the business. You're not putting any of them aside to repay, say, debentures in future. Okay, 2.28 is still, it's low enough. Okay, you don't want to be paying out all your profits as dividends. Like I said, it's kind of, after you pay all of your expenses, there's kind of an amount of profit left over, and your choice is, do I pay it out as a dividend, or do I retain it in the company, reinvest it in the future of the company? Okay, you're always going to pay a certain amount of, not always, but you're probably going to pay a certain amount of dividends. Certainly in these questions, you'd always pay a certain amount of dividends, but you don't want to see all your profits. So 2.28, I would say, is still quite low, but it's going in the right direction, I suppose, is what I'd be interested in there. Yeah, I mean, we've done dividend per share last year. Do we have it for last year? Yeah, so maybe just put it in here. So dividend per share was 10 cent last year, and it was in my, I needed to work it out for my dividend yield. So it was 8.29 cent. So dividend per share has decreased from 10 cent to 8.29 cent. I mean, on a really, really basic level, shareholders want dividends, so it's gone down from 10 cent to 8.29 cent for them. But I mean, shareholders are still interested in the company, surviving and thriving and doing well. So this is a company with liquidity problems where profitability and things are going down. So this is a company that maybe needs to retain profits, reinvest them in the future of the company. So the fact that it's going down, I think even shareholders might see it as a good thing here. Certainly the debenture holders would be. So has decreased from 10 cent to 8.29 cent. The company is paying less of the available profits out as dividends. So we'll have more left over to invest in other things for the future of the company. Yeah. and other things. Nice in general. All right. So, I mean, yeah, that'll be my dividend answer here. Like I said, if this was from the point of view of shareholders, I'd be interested in dividend yield. Dividend yield for them is like a percentage return on what they have invested. So I will be comparing it to my 1 to 2% return on risk-free investment, my preference rate, my debenture rate, but I won't include it here. The last thing is share price. So I've done all of these. I'm down to share price. This is probably a bigger part of a shareholder question. They don't include it here in the marking scheme. I think I probably would. I would certainly. There's one kind of very easy, quick point that you can cover off for share price, which I would put in anyway. Doesn't require any calculation. So share price last year it was 160. This year it's 135. If your share price is going down, the market has less confidence in the company. So that's not good. If the share price is going up, they think the prospects of the company are good. They have confidence. Okay, so the market value of an ordinary share has declined, gone down from €1.60 to €1.35. Suggesting a lack of confidence in the future or in the prospects of the company. You know, this will be concerning to debenture holders, this will be concerning to shareholders, okay? You want to see that market price increasing. For share price, if it's from shareholders' point of view, I would probably compare, I might include earnings per share here. You don't have to, you've already probably put it in profitability. The price earnings ratio I would probably include here. Or if you've worked it out, then the time to recoup share price at current payout rate. So if you have those for last year, compare them. Price earnings ratio and time to recoup share price at current payout rate, they're probably worth putting in here for a shareholder question, you know, just on their own merits, even if they weren't there for last year. I would say you could also work them out for last year, because price earnings ratio is market price divided by earnings per share. So yeah, that's one thing I would say. So we have last year's market price and we have last year's earnings per share. So I could work out the price earnings ratio and compare that. I said, because as the debenture holder, I think I won't. I'll leave it to this kind of quite brief point. But for a shareholder question, certainly I would put that in. So we have to calculate the price earnings ratio for part A, and it is something I can work out for last year. So market value of one ordinary share divided by earnings per share. So it'd be 8 times. And what did I get it this year? Or 8 years, sorry, rather than times. So price earnings ratio was 7.16. So it went from 8 to 7.16. So you could comment on that and just kind of say what it means. But again, I think probably not worth it for a debenture question. So there is some slight differences for a debenture point of view, debenture holder point of view versus a shareholder point of view. So that's it, apart from at the very start of this part B, I kind of said I would play it by ear as to how I would start the question. So what did they ask? Would the debenture holders be satisfied with the performance? So I would say overall, most of the signs there were negative. There were a few kind of green shoots and positive signs, but I would say overall, debenture holders would not be satisfied. with the performance. State of affairs. And prospects. Of the company. Okay. If they ask you for some specific advice, like should you loan them more money or should you buy more shares or something like that, you could put it up there. You could maybe return to it at the end of the question and make a recommendation: buy the shares, loan the money, or don't. Okay, but just don't forget to put that in. There's usually like a mark or two, a couple of marks going for that. All right, so that's my part B. Obviously, it took me quite a while because I was kind of talking through it. The main thing, as I've said, is cover those headings. Okay, so profitability, industry, gearing, liquidity, dividends, very similar for all questions. From the point of view of a shareholder, focus in on investment policy here and a bit more detail on share price. From the point of view of the debenture holder, focus in on security. You'll probably touch off investment policy as well, and you can maybe just put in a quick line about share price, but less concerned maybe with the other ratios you can bring in there for a debenture holder question. So make sure you hit those headings. So pig lids, lip gloss, however you remember those. Be led by this. So it is all about comparing this year to last, okay, and trends. So be led by that and comment on those. That's the main thing you want to get in. So are they going up? Are they going down? Most things we're happier when they are increasing. Maybe gearing would be the main exception. We're happy to be going into a lower geared situation. Remember those few kind of benchmark figures, so 1 to 2% for the rate of risk-free return. Even that, as I said, is probably a little bit high now, but I think that will be fine. 1 to 1 as the ideal acid test ratio. There's a couple of lines there that you'll make sure to put into answers, like what liquidity means, is able to pay its debts as they fall due. Profitability, this indicates the company is or isn't making efficient use of its resources. So you've got my notes as well on this, which kind of lay it down on paper, and maybe are easier to look at than listen to me on some of this. And anything else there? Yeah, like I said, just getting like a few bullet points down for each heading. The industry one, you saw when I was answering that, I was kind of struggling to come up with it on my feet a little bit, what I could put down. So for that one, it is very much just quickly get a couple of points down. Depending on the industry, it might be more obvious than not. Keep it a couple of kind of general enough points is what I would say. It's usually around 7-ish marks for each, so between kind of 4 and 7 marks for each section. So if I look at the actual marking scheme for this one, it was 7 marks for profitability, 4 marks for the dividend section, 7 marks for liquidity, 7 for gearing, 6 for security, 5 for industry or sector. It was 4 marks going for debenture holders would not be satisfied. So 4 marks going for just having that sentence in. So it's an important one to get in. But between 4 and 7 marks for each section. So just kind of get, your 2, 3 bullet points down in each section. There's no marks, say, just for calculating those ratios at the start. So I need to calculate the quick ratio, I need to calculate the gearing, I need to calculate the dividend cover, I might need to calculate the price earnings ratio if I'm doing a shareholder question and looking at share price a little bit more. The marks are going for actually putting them into these headings and commenting on the trends. Okay, so again, like the part A, just make sure you know those formulas like the back of your hand. You're able to write them down, work them out very quickly, accurately, without any issues. Okay, so that is the part B of that question done at last.